Welcome back to All Things ETH. My name is Aaron, and on this channel we talk about all things DeFi. And today, guys, we have an AMA that we just recorded inside of the GMD protocol Discord, and that was with Savvy DeFi. So without any further ado, I'm going to get right into it. We have the guys from Savvy DeFi joining us. They just pushed live their integration with the GMD, the GMX vaults that we operate in this protocol, and I know a lot of you who are joining us will know a lot about those. But if you're coming from the Savvy DeFi space, we want to welcome you to the ecosystem of GMD. Hopefully, you're using the Savvy DeFi side if you're coming from that Discord in particular, and you're getting some benefit from some self-paying loans is what I understand we're going to be talking about today. So so Alex set this up. We have talked. I got the permission from GMD Crimson, who initially was the contact for Alex, and I just want to put that out there because Crimson holds a lot of weight in this space. He's been with GMD since the start. And though he's not doxxed and will not do an AMA anytime soon, I just wanted to put out that we have his authority to do this, and we are excited. Whenever we integrate a new protocol like Savvy into our system, it's because we've done some back-end work. It's not something that you guys, it's not open code that you guys can just find and create yourself. From what I understand, you actually do have to get permission to be able to do this. So we've done our due diligence. We're partnering with Savvy DeFi like we have with other protocols to use our GMD token vaults, and we're really excited to have them onboarded. We are pushing, by the end of the day, we're pushing some more space in those vaults, I understand. So Crimson should be pulling the lever to open up some more space in our ETH. GMD ETH, GMD Wrapped Bitcoin, GMD USDC, and GMD USDT vaults. Sometime tonight, Central Standard Time is where I'm at, but, early morning or wherever you're at, it'll be 11 o'clock my time, understandably. So with that, thank you so much, Alex, Ramsey, and IDM for joining us from Savvy DeFi. I'm going to turn it over to you guys, and I'll interject questions when I have any. If you guys have any questions in the chat, please type them up in the chat, and we will get to them at the appropriate time. But I'm going to turn it over to Alex and team to get started here.
And so, thanks so much for having us. So I think kind of the way we'll do it is we'll give you just a quick kind of 30-second overview of Savvy, kind of what it is, and then we'll talk about our backgrounds. But I also think it'd be cool because we'll have some people from the Savvy side who maybe aren't as familiar with GMD. So if you could give kind of a background on yourself and on GMD. And then Ramsey will go into a little bit of a product demo and show all the cool stuff that he has built. Let's be clear, he built it, not IDM and I. He'll kind of go through the product, show a demo. We'll talk about kind of what it means to use Savvy and use GMD, and we'll show you kind of what the market making campaign is and how you can kind of get involved with the SVY token. So just to start there, what Savvy is Savvy is a non-liquidating, auto-repaying line of credit with 0% interest. So what that means is that with Savvy, you can make your crypto work for you by kind of depositing into a strategy like GMD. You can take out a line of credit, and because it's non-liquidating or it's liquidation free, you're able to go and do whatever you want with that line of credit, but it's with minimal risk, right? Because there's no liquidation. There's 0% interest, and there's no monthly payments. So that allows you to kind of be more capital efficient and make your crypto work for you, without the risk that typically comes from getting leverage on Aave or all these other places where you can get liquidity, and there are more interest rates. So that's kind of the quick overview of Savvy, and Ramsey will drop in here some information on Savvy. We'll dive more into it. I'll show you exactly how it's non-liquidating and all that. But I will point out that a lot of people in the GMD community are familiar with kind of this concept because they've heard of Gast, right? And Gast, we've been poking around with it, playing around with it. It's a super interesting protocol, and it's obviously going very well because it's completely full. Savvy has some similar components to Gast in that it is non-liquidating, A few of the differences are that Gast is kind of more focused on GMD, and Savvy, we actually have multiple yield strategies that like we can get into. But we'll talk more about those similarities and differences. But for all people on the GMD side, yes, it is similar, but just a little bit different. So I'll stop there, and I'll have Ramsey and IDM and myself. We'll introduce ourselves, and then we'll dive in further. Ramsey, you want to go first?
Sure. Hey folks, my name is Ramsey. I'm one of the technical co-founders here at Savvy DeFi, responsible for building out the product over the last year and a half, alongside with Akshay and a few of the other great engineers. Um, yeah, we're really excited to provide a more capital efficient way to use, your GMD tokens.
Hey, yeah, maybe I'll introduce myself. I'm IDM. My background is that I've got a PhD. My dissertation was generally on complex systems, and so crypto and blockchain was just a natural extension of that because these are kind of like petri dishes for complex systems to grow in. And so then I moved into DeFi economics, tokenomics, that kind of stuff. So with Savvy, I've analyzed liquidity bootstrapping pools, token launches, the tokenomics and emissions, the market making campaign that we'll be talking about, a couple of other things. And yeah, I'm just kind of like a long time Phantom degen. I also am a mod contributor at Morphex, which is a protocol on Phantom and Binance. I do Discord stuff, and yeah, just help out where I can.
And my name's Alex, and I guess I'll be the hype man for these guys. Like Ramsey has an awesome background. He's worked at an AI startup, was hired by Microsoft 15, has an unbelievable mustache, which is arguably the most important thing about him. He also worked at Xbox and at Stripe, and now just happened to work at Savvy. And IDM is basically takes a lot of the things that we come up with at Savvy, and like intuitions that we have, and helps model them out and figure out if it's actually realistic and how it can work. So he built out a whole simulation of Savvy. He's become a leading expert in LBPs, which Savvy's going to do an LBP in a couple of weeks, which is a liquidity bootstrapping pool. And we have a bunch of other great teammates, but you'll learn more about them now. So I'm Alex. I do growth at Savvy. My background is typical management consulting. Was the first employee was an early stage employee at a startup that exited. Then I went to another startup, first employee co-founder, and that also exited. And then got into product development and worked with a bunch of very large companies to help them develop their products, go to market, think about the voice of the consumer, and then got into DeFi in this world. And I come to this world because I want to help build better, more sustainable protocols. In DeFi, a place where we've seen a lot of things that maybe aren't as sustainable. This is part of the reason why we at Savvy are doxed, why we think about things on a 6-year emission schedule, why we're trying to build. We're not just here for a good time; we're here for a long time. So that's a little bit about Savvy. I guess we'll stop there. All things ETH. Any questions? Any thoughts?
Yeah, I just real quick to your audience, I'll introduce myself as well since we're at it. I go by All Things ETH on Discord and on Twitter, but my name is Aaron. I am doxed as well. I've had a YouTube channel in the space for the last 2 years. Started in play to earn, actually got kind of sucked into DeFi through that space, but I was an options trader and day trader a little bit in TradFi. Before that, and have a little bit just an entrepreneurial background in general, video production company business, advertising business as well. And so I mod at GMD and I mod at GND. I was actually brought on through the launch of the GND protocol on with the team here. Both teams are the same. The dev, Saul Goodman, created both GND and GMD. So I'm really familiar. I've been investing with GMD since they came to be. Our products are based. GMD side is based mostly on GLP vaults or the GLP liquidity pool on GMX. That's what Savvy is going to be dipping into as far as the yield bearing protocol. We offer a delta neutral strategy where these GLP vaults assets are creating about 15 to 25% APY, consistently back-tested, and hopefully forward ongoing as well. We will be introducing some Mux vaults very shortly. I understand that could be, I can't go into when, but it's very soon, as we all say, right? And that'll be something that you guys can dip into as well, I'm sure, if you'd like to diversify. But that's currently where we're at. GMD is built on UniV3 vaults, but I won't get much into that because that is not part of this conversation. So thanks for letting me introduce myself. Go ahead and get started with your presentation, guys.
Sure. So I'll kind of give you the quick update on Savvy. So as we kind of talked about it, and I guess I can share my screen quickly. So what a lot of people ask us is, how is Savvy non-liquidating, right? As you can see on my screen, like the concept of Savvy is that we make your crypto work for you, right? So when you come to Savvy, you can be more capital efficient, right? You can deposit your base token, right? USDC, BTC, ETH, or you can even deposit your receipt token, right? You can deposit your GMD token, GMD BTC, into Savvy. This base token or this receipt token is deployed into the yield strategy, right? Aave, Unsheath, Jones, Beefy, including GMD, and then you can borrow your line of credit. And that line of credit, it's your future yield up front, and you can go do whatever you want with that. Initially, you can go and make market provide the utility and kind of farm the SUI token, but over time, this credit line is actually paid off. So people look at it and they go, "Oh, it's a loan." But the bigger thing is that whenever you take a loan, you're thinking about the risk reward calculation, right? How much reward am I getting for this leverage, and what is my risk? The risk in loans are typically, you have monthly payments, you have interest rates, and you can get liquidated. For Savvy, those risks are zero. There's still smart contract risk, but the risk is significantly minimized with that. So you can take leverage and have stress-free leverage, right? And now you're actually, it makes sense to go and borrow, and it makes sense to borrow, take that credit line, and go do whatever you want with it. So as we say, you start your strategy with Savvy, and you get leverage without the fear of liquidation. Does that make sense? All things ETH. We'll kind of make this a little bit of conversation. I want to make sure that we're explaining it well to you, and you're kind of have questions with us. We can go back.
Yeah, no, that's good. I understand. You're partnering with more than just GMD, and I like the concept is great. The self-repaying line of credit, the loan is paid with the yield that it's created through your deposit assets. If that's correct.
Yep. And so, like, if we think about yourself, right? So I think I've watched the GMD video before on yourself, and like, you obviously use GMD, right? So what you can do is you have this GMD, and I would imagine currently it's either probably in gas, or are you just hanging on to it and holding on to it and hoping it appreciates, or kind of what are you doing with your GMD token?
Yeah, currently my GMD tokens are all in Gast, and then I'm borrowing ETH. The way Gast makes their product non-liquidatable is you can only borrow the asset that is congruent with the underlying. So if you've got the GMD ETH token, you have to borrow ETH inside of gas. So I'm actually kind of double dipping with my GMD tokens. I've got GMD ETH in there, and then I'm borrowing ETH, and then I'm bringing ETH over to something like Silo, and then borrowing even more. Getting some of that yield so that I can pay down some of these loans, but because the yield is so good inside of GMD that I'm able to kind of double dip. But I'm also earning some tokens within these different protocols, making some traffic in there, and also building TVL. I'm a supporter and contributor over at Gas, so I do want to make sure that their TVL's up. So that's a portion of why my tokens are over there as well.
And I want to, for all the people who from Savvy who haven't heard of Gas yet, Gas is a super interesting protocol built kind of in partnership with GMD, or like based on the GMD Launchpad, and they're also non-liquidating. They do it a little bit differently. We don't have to get in all the differences, but some of the there's a deposit fee and I believe in an exit fee. They have collateral up to 80%. They have there's some other like subtle differences. Mostly that it's focused on GMD, whereas we're on multiple ones. And at the end of the day, this is DeFi. It's good for everyone to have multiple options and diversify, right? So we think it's awesome they're doing it, and also because honestly, this concept of like, if you'll let me go on a rant real quick, it's so weird that in Web 2 and TradFi, it's just we just are okay with liquidations. It's like, yeah, it's cool. I'm okay if I just lose everything, if I lose my shirt. But like that's not the way it should be. Like businesses shouldn't make money when someone else loses, right? Like if we set it up so that we make money when you make money, that's a better kind of incentives and alignment. So we're in favor of other protocols taking this concept of liquidation free risk and applying it because it's better for, we believe is better for DeFi and overall.
Yep. But don't tell the GMX guys, because liquidations on GMX is where we get some of our yield from, right?
Yeah, I guess that's a good point. I forgot about so true. So for you, like, you're using gas, using your GMD tokens. If at any point you want to diversify, you could take those GMD tokens and put them into Savvy, get some exposure to Savvy, either into other underlying strategies or through GMD, and also accrue some of the SVY token overall.
Yeah, absolutely. I think that's an interesting strategy for sure. I like the self-paying portion of what you guys do as well. I think that's a interesting way, and I also find your backgrounds to be, correct me if I'm wrong, a little bit more finance specific, and it seems like, obviously Ramsey, you have more startup background, but Alex, I think you come from a more traditional finance background. Is that correct?
No, so actually what's interesting is that our team, Ramsey, you want to take this one?
Sure, I can speak to it. So we definitely have a pretty great mix of folks on the team. So one of our other co-founders, Roman, who's not here, is a previous banker with JP Morgan. So really deep knowledge on financial concepts. Also just long time degen in the crypto space. Used to host Clubhouse talks back in the day of hundreds of people trying to educate them on blockchain and crypto in general. So we have Roman's expertise. Roman also had a successful exit in the kind of Web3 space. And then so then Alex or myself and IDM kind of share our backgrounds, and we all have entrepreneurial backgrounds, also deep knowledge in kind of like financial instruments, given IDM's PhD in complex systems, my background at Stripe and other AI startups, and Alex's background, taking multiple companies to successful exits. Another co-founder we have is Akshay, who has spent the last decade running a global software consultancy, so is used to building companies from the ground up to a global scale, hiring on the scale of hundreds or even thousands of engineers underneath him. So we have definitely an amazing breadth of knowledge, and in addition to that breadth, depth of knowledge here in the Savvy team. So we really understand kind of these financial concepts, but also know how to build a product and scale a product in a healthy way. So as Alex mentioned earlier, we're definitely here for the long term.
That's great. I think just the feel of your protocol and just my short interactions with you guys, it feels very professional. Obviously, you're doxed, so it's a little bit different than other protocols in this space. What was? Can I just ask you real quick before we move on? Like, what was the reasoning for that?
The reasoning for which part? To be professional or to get into the space?
No,
or?
I'm sorry, to be doxed in this space in particular.
Ramsey, what's your reasoning?
Yeah, from our perspective, so I'm relatively new to the crypto game, maybe the last 2 years. Hard to say what's new and what's OG these days, but I'll say I'm pretty new to this space still. I have always trusted, like, in kind of the TradFi space and just like the real world. I've always trusted people that I can see and talk to, and interact with, and get deep with. And one of the nice things about docs projects here in Web3 is I can dig into your background and try to understand how credible you are when we're interacting. It's been so kind of in that in that same vein, I wanted to dox myself here. And I think similar reasons for the rest of the team doxing themselves. Essentially, it's just like added proof that we're here to build something sustainable in the space and really build for the betterment of the space and the individuals in the space, and that we're not here to make a quick buck. We're not here to manipulate your funds, anything like this. Uh, we were so confident in that ethos and that take that we're willing to put our faces out there, our backgrounds out there. You can dig enough, you can probably find me at QFC shopping for groceries. So that was really my motivation for doxing myself.
And I will say, like, Ramsey and I are a little bit more new to the space, but this was big time. Roman and Akshay were like all about we have to be doxed, we have to be doxed, etc. And so props to them. But I also will say, like, if I think about it honestly, like, I know it is different for people who have been around in the space for so long that like they're used to being doxed and they have built up this brand around being around not about being a non and built up a brand around being a non. But for me, if I think about it honestly, like I can't imagine not being doxxed because it would feel like it's not being truthful. And this is just for me. I don't know about it, but it would feel like I'm not showing a part of myself. And when in reality, like when we build businesses, at least at Savvy, like we put our heart and soul into it. It's like hard to not show that part of us. So that's just from our side.
Yeah, that's great. Feel free to move on, guys.
So Crypto KR or CryptoCur asked a great question. It said, "How does Savvy differ from self-repaying loans from Alchemy and Abracadabra?" IDM, you wanna take this one?
Yeah, sure. Thanks. So we did take inspiration from Alchemy. Some of the contracts share some of the same battle tested, at least ideas in some cases. And there's a little bit of overlap where some open source could help. So the Alchemix team have invited us over to their fireside chat. We got to know them pretty well. Oh yeah, did I say Alchemy?
Alchemix, Savvy, Gast, they all have in-kind loans, which means that there doesn't have to be a liquidation feature. So that's how they're similar. Now, how is Savvy different from Alchemix? It's kind of a few different things. One is we're doxed. We have a capped supply of tokenomics. We have a different value accrual structure in that we actually buy back the token. And then finally is just that because we were able to fork the Alchemix contracts, rewrite them thanks to Ramsey and Akshay, it allows us for our different technical architecture and also to not have fragmented liquidity because we're starting from a different place in time. Because we're able to leverage some of the new technology that has come out, things like Axelar or Layer 0, we don't have to fragment liquidity as much. So it should be easier for us to move to a new chain. Does that answer your question, Crypto KR? And feel free to drop a message if it doesn't. All things ETH, did that make sense? Or what questions do you have on that?
Yeah, actually, it answered my question well. I think I know Crypto KR actually quite well. So if he's satisfied, and it looks like he is,
Oh man,
that's good. He and I have been trading yield farm secrets for the last 6 months or so. So I'm glad you're here.
I will point one thing out is like if you notice Alchemix, Gast, like those two, and even Savvy, like they end up being so popular and so utilized that there's whenever there's availability, like people just fill them up. So there's enough room in the space for multiple of them, right? There's other things that are limiters in the factor. It's like we don't have to necessarily compete with each other because there's so much room.
Yeah.
I think we had another question here.
Go ahead.
Oh, sorry. Go ahead.
No, go ahead. Yep, go ahead.
Ramsey, you want to cover this question? Checking audit repos links.
Yeah, so Deckpart asked a good question referring to the risk of the protocol as well as some of the smart contract logic, right? So as Alex alluded to, we provide loans in kind. So we do that by providing a synthetic version, and we'll kind of get to this in the demo in a moment or two. but we provide a Savvy synthetic version of the token. So if you deposit Bitcoin and you want to take a borrow against that position, you're borrowing in Savvy Bitcoin. From there, you can go and swap that out for no Bitcoin and kind of do whatever you want with it. So one risk that we have is what would happen if the synthetic token were to depeg from the underlying base token, right? We have multiple mechanisms in place that try to that keep that peg as strong as possible. So one is internally in the system, we treat the Savvy synthetic and the normal base token as one-to-one. So even if the price of the Savvy synthetic is maybe below the price or above the price of the token out in the world, you can actually use the internal mechanisms of the protocol to arbitrage that opportunity. So you can repay. So for example, if the Savvy synthetic is cheaper than the base token, then go buy a bunch of Savvy synthetics and then repay your loan early using that Savvy synthetic. Essentially, you're repaying your loan at a discount, and then hopefully that drives buy pressure, which returns the token to the peg. We also, so that's one mechanism. The internal treating it internally one-to-one. The second mechanism is the fact that we have this thing called a transmuter or the Savvy swap. So the Savvy swap essentially takes so in the first version you can use the arbitrage to pay down your credit line faster, and the second opportunity you can use that arbitrage to actually just straight convert the synthetic assets to the base tokens one-to-one. So this is like a time locked convert based on so for example, if the Savvy synthetic of USD is trading at 80 cents to 1 USDC, you can buy a bunch of that cheap Savvy USD, go over to Savvy swap and deposit all of that and swap it one-to-one to USDC guaranteed. So maybe over the span of the next week, you'll convert all of those Savvy synthetics that you bought at 80 cents on the dollar to USDC, to real USDC that you can go and just trade. So you make a 20%, 20-cent profit on that arbitrage. So those are just two mechanisms that we use to try to protect against depegging our Savvy synthetics. Now going to smart contract risk. So all of our ERC20s are immutable. So we can't update the logic. Our main protocol token SUI. We have actually revoked the minter role, so we can't just arbitrarily mint more versions of it, more SUI in the future, and inflate the currency. All of our Savvy synthetics are the minter role specifically assigned to the CDPs, and the CDPs are the only people who can, or the only contracts who can mint the Savvy synthetic, and it's entirely managed by the CDP. So the team themselves can't just go in and just print additional debt tokens. We can actually add the gold back. So it's specifically those contracts that have that access at this point. Now the main logic is under proxy, so we can upgrade the CDP logic as we need. So as we the space is evolving so fast, as there's new types of yield strategies that we need to add, we might need to extend the logic. If so we can upgrade those proxies, but they are going to be on a 24-hour time lock, and so that so the whole community understands what changes are happening and are alerted to them, so they can adjust their risk profile accordingly. Also, all of our changes go through multi-sig, so I can't individually propose any changes to the configuration of the CDPs. Neither can I upgrade the contracts without at least members of our multi-sig reviewing it. Right now, the multi-sig is the team, but in the very short future, we as we kind of stabilize post-launch, we plan to bring in other members to our multi-sig. So active community members we want on our multi-sig. We also want people who are just not involved with Savvy or even our chain in general, but understand blockchain to be on the multi-sig. So we really want to make sure we find the right balance of experience, expertise, and then also try to reduce the bias of just signing because I know Ramsey or because I trust the team. So that's how we're trying to mitigate the risks. Does that make sense?
Did you catch all of that? All things ETH?
Yeah, I think so. That makes for some complicated multi-sigs down the road, but yeah, I think that's the safest way and a very decentralized way of moving forward.
The honest thing is at the end. Oh, sorry, Ramsey, go ahead.
You got it.
So at the end of the day, like there's two biggest, like there's a smart contract risk and there's the financial risk, right? And for us, the smart contract risk, there's lots of things that we're working on and doing to make sure that we reduce that smart contract risk. And these are things that you can never control 100%, and all you can do is reduce the risk, right? And the second one is the financial risk. Ramsey's thinking deeply about the smart contract risk, and I'll let IDM talk a little bit about his about the loss of pegged base token and kind of that financial risk. One thing I will note, and IDM can talk more about this, is that this is something like when we forked the smart contracts from Alchemix and then rewrote them. One of the things we took wasn't just the smart contracts, but the financial system, right? And the cool thing about that is it's been tested, right? So there's lots of events that have happened since 2021 when Alchemix started. And Alchemix has been able to survive those. You know, Luna, Terra Luna, all these sorts of different things, and it's survived the peg. One other thing that has been added is that now we're using Trader Joe's their liquidity bins and like their stable swap pools that allows us to actually maintain the peg even more. But IDM, we want to touch on that a little bit more?
Yeah, definitely. I see over in the chat, Crypto KR says, what prevents the loss of peg to the base token. And yeah. So part of it is that it's a fork of Alchemix. Well, I mean, like, at this point, I think we were talking about it the other day, that it's like under 20% of the code base, for whatever that's worth. We've taken the ideas really far. But we also wanted to look at a bunch of scenarios that hadn't even happened yet. So yeah. As Alex pointed out, we do have this historical perspective. We've been calling it in some ways like the second mover advantage. Alchemix debugged some of the issues, but of course we don't do exactly what Alchemix does. We have to adapt everything, and so we've also used a lot of simulation to look at two things in particular about the loss of peg, or two mechanisms that ensure that the peg is self-correcting. So Ramsey already talked about arbitrage. So arbitrage is just a natural market force that makes it attractive, to engage in that kind of thing. And there's another strategy out there. This is an idea that's inspired somewhat by Alchemix, in large part by Frax. They call it an automatic market maker, or automatic market operator. So we have also modeled what happens when we use some of our contracts, which have adopted this automatic market operator model. What happens when we bring an automatic market operator in that specifically targets the peg? If there's an arbitrage opportunity, that's one type of operation that can that the protocol itself can take advantage of. And also, Frax has been demonstrating single-sided operations on the pools. It's possible to rebalance through several mechanisms. So this is just one of the ways that we've gone like really in a pretty different direction. I think we're talking too much about Alchemix, actually. It's just way different by this point. Back to you, Alex. Yeah.
Crypto KR, I'm happy to send you over a couple of articles that talk more about this. But I think in the meantime, we can go into the product demo. Ramsey, if you want to share your screen, you can go into that so people can see how they can actually deposit in Savvy.
Yeah. Ultimately, can you give me access to share my screen?
Yeah, let me see here. Should be coming up.
It's back to my GM. Here you can deposit pool as the same SDT and a lot of management. Basically, you can get getting into GMD. You should think about getting into GMD through Savvy just to really maximize your capital efficiency. So in this case, I already have some GMD BTC. Like many of you guys, I'll go ahead and just gonna start there. So I'll deposit my balance of that seems right. Yep. So I'll go ahead and prove. So this is just saying, hey, Savvy, you can get access to my balance in GMD BTC. With all the allowance hacks going around lately, I'm gonna just allow up to what I'm trying to deposit. Just a good practice in general. Great. So I've approved my amount of Savvy to access my GMD BTC. And now I'm gonna just go ahead and deposit that into Savvy. So what this is doing is it's taking my yield token and then adding it to the CTP position. So now within Savvy, I have 0.0025 GMD BTC, and I can borrow up to half of that in Savvy Synthetics. Now again, if I didn't have GMD BTC, I can just deposit directly using that base token. And this will again just go through Savvy, deposit it into GMD on my behalf, which just saves you a bunch of clicks and gas, which is awesome. So now I have, I have some deposits here. I'll go ahead and borrow against that. So I'll go to manage my credit line. I'll borrow up again to 50% of my deposited collateral. So I deposited 0.0025. So I'll borrow, half of that here. And this is going to give me that synthetic version that we talked about earlier. Now, this is Savvy BTC. This is pegged 1-to-1 to soft peg to BTC. What I can do is I can actually go to Trader Joe, take my Savvy BTC and swap it for BTC. So from here, I can do any kind of crazy things I want to do. Maybe I want to go buy, again, my Lambo. Oh, sorry, I don't have to put the wrong number in here. So yeah, I'm gonna buy my Lambo. Maybe I want to go back in DGen box, maximize my yields, so I can go back and take this money, go back into Savvy, and just keep depositing in that position, increasing my exposure into GMD, maximizing my yields, and then from there, yeah, or I can just go make the market myself, right? So if I were to go back to this protocol, I can actually in Trader Joe, I can actually make the market by taking some of that Savvy BTC and say I have some extra wrap BTC. And I can go ahead and deposit some of both into here and then get rewarded by Savvy for being a market maker. So that's kind of like the run through the demo. So now that I have this open position back in Savvy, you'll notice that over time, that 5% that my collateral is earning will pay off my loan. So I don't have to ever come back here. I just know for sure that this amount will drive to zero over time. Yeah, and it's really stress-free because I'm taking a loan out in kind. So I deposited BTC, or in this case, GMD BTC, and I'm borrowing that synthetic version of that BTC. Then I don't have to ever worry if BTC price crashes or whatever. I know that I always owe one BTC because one BTC is always one BTC.
Yeah, it looks great.
Cool.
I think that's pretty simple. Just depositing your GMD BTC, getting that synthetic SVBTC, and then going over to Trader Joe to swap it, and then buying your Lambo.
Yeah, fun is that. But even cooler is if you were to be a market maker, right? So definitely, as I mentioned earlier, we're incentivizing market makers right now. But I'll let Alex speak to that a little bit more. Alex, you're muted right now. Pass the Discord.
I was saying the coolest stuff, but there's actually so you can always come into. We haven't announced this yet, so this is some out for you guys, but we're going to have a liquidity bootstrapping pool on Fjord Foundry on August 8th. For those of you who aren't familiar, Fjord Foundry was kind of one of the pinnacles of launch pads during the bull run, and they actually just got bought out by Concave, and it's going to be an awesome liquidity bootstrapping pool on Fjord Foundry. And if you go there, you can come and purchase the SPY token and have ownership of it immediately. And just as a side note, IDM is an expert on liquidity bootstrapping pools, did a whole simulation on it, given some great talks on it. So those are two ways you can purchase or interact and kind of get the SPY token. Market making campaign and the LP and the liquidity bootstrapping pool. I'll show you quickly what the market making campaign is. So the situation here is like you could imagine, as Ramsey showed you, you can get into Savvy with your GMD receipt token, right? But all of a sudden, it's likely that if you're long on BTC, and we know that the GMD BTC gets filled up very quickly. If that's the case, and you still have BTC, you can come and you can maintain your BTC, but you can provide it into Savvy. By that I mean you can actually come into Savvy, you use our market making campaign zapper. What you do is I actually don't have much BTC. I actually put it all into GMD when I was playing around with GMD the other day. You come into Savvy, you deposit your WBTC, you click approve, and what this will do is it'll actually zap and actually kind of split your WBTC into both SVBTC and WBTC. I approve the max. This is something that Ramsey built out because I like to make it simpler for the users. Now that I have this amount of SVBTC and this amount of WBTC, I can actually go to the liquidity pool. So I go back to Trader Joe, exactly where I LP'd before. And same thing, I would click max on both of these, right? I would select curve. I would do my 3 bins, right? And I can provide liquidity. I'll do 6 bins here. Normally we do 3, but in this case so we do the 3 bins, and I provide the liquidity. Boom. So now what happens is, again, as Ramsey said previously, because I've made the market, I can come back here, and it'll tell me the amount of SVY I have earned. And this is my test wallet, so I've not earned much SVY, but we have some people, like you might be familiar with Blue from Trader Joe. He's like their head of growth and community. He tweeted this out June 22nd because we launched on Trader Joe and had an AMA with them. He earned 1,400 SVY in the first few weeks of the market making campaign. So this is the kind of an example of what it's like to kind of market make and farm the SVY token with the market making campaign. And if anybody wants any more information on the LBP, I have to provide that later on. So I know that was kind of a lot. All things ETH, are you still here with us? I know you
I'm back. Every time we switch to a new screen, unfortunately, I get a little bit of lag. I'm not sure if that's because I'm hosting or if I'm just getting a bad connection, but it makes a lot of sense. I know those familiar with Gast can also are used to adding liquidity on the lender side. So similarly, they're able to earn the gas tokens, or GA tokens, I should say, GHA. So they're going to be familiar with that kind of concept as well.
Yeah, and I know CryptoKR asked, will this be a better opportunity than leveraging on Rodeo? And I don't. Could you just elaborate on what you mean by that? We can't comment directly on Rodeo. We've spoken to them and worked with them. They're great guys. Obviously, they had something tough happen to them, but could you just elaborate on what your question is?
Yeah, I think I can probably answer, what he's talking about. He and I talked so much that I think I can understand what he's talking about. So leveraging on, he's a big JUSDC fan on Rodeo, and leveraging that. I think it's different. Correct me if I'm wrong. I mean, Gast has a leverage system where you're going in, you're adding your GMD ETH, perhaps you'll borrow ETH, you go back into GMD and add your ETH to that pool again, and then you're looping, right? Is there any looping that you can do within Savvy?
Yeah, Ramsey or IDM, do you guys want to comment on that?
Yeah, I could say a few things. So looping definitely is possible with Savvy. Just right off the bat, you could loop as much as you want. So Savvy is an over-collateralized protocol. So which is very conservative and very stable, and for a whole bunch of reasons. Under-collateralized. Basically, it implies that you're putting in less collateral than the quantity of the loan. And once you get into that, then you've got to do all sorts of then you start talking about liquidations and so on. So looping is definitely possible, but it's not going to get you leveraged beyond the constraints of this over collateralized protocol. It's just not designed that way. So there are other places that have a different risk model. And there are possibilities, for Savvy to integrate with different kinds of yield protocols in the future. So I'm not going to say, things are impossible, but the way that it is right now, it is designed to be a liquidating protocol due to its DNA, and it doesn't do leverage. Is that actually the question? Was I just
like maybe I'll try to answer it a little bit differently in that
yeah.
Crypto KR, like, I'm not going to tell you if it's a better opportunity than Jones DAO or Rodeo. Our kind of take on it with Savvy is that we choose to be agnostic and just allow the user to choose whatever yield strategy they believe is the best, right? When we think about over the long term, what Savvy wants to be is that Savvy's job is to go to as many chains as possible, build on as many yield strategies as possible, and create as many use cases for the SV token, and basically build on as many different use cases of different types of yield strategy, right? That's our job. Your job as the user is to choose which one you think is best and to decide how you want to use it, right? Like for you, Crypto KR, if you love JUSDC and you love GMD, I mean, you don't have to choose either one. You can do both in Savvy, right? You can take your GMD token, you can put it into Savvy, you can take out your line of credit, and then just drop it back into Jones DAO when that's built out, right? So you can do it however you want. You can mix and match. That's up to you. And kind of Savvy's your oyster.
Yeah, it seems like Savvy's got a little bit more conservative and being under collateralized or over collateralized rather at a 50% ratio, where something like Gas is going to have an 80% ratio. LTV. So I think you guys are definitely more conservative in a good way, but also I think that's definitely a product market fit or a niche you can definitely be in.
Yeah, and correct me if I'm wrong, IDM, but you can loop up to 2x, almost 2x with Savvy.
Yes, that's exactly right. It's going to like asymptotically approach. You can almost get through looping nearly the same amount of collateral or the same amount of debt as collateral. You approach that one-to-one kind of thing, but you never quite get there.
Yeah. Crypto KR, does that answer your question? And I know we're approaching the end here, all things ETH, so we can wrap up. Do you have any last hard-hitting questions for us?
I think you guys have done a good job. If we need to go over a little bit, that's fine. I know I've had a couple connectivity issues, so if we need to go over everything, but I think I've caught everything on the recording, so that's what I'm most concerned about. I'm excited for you guys. I know you just launched. I'm excited to have some more room in the GMD vaults, as there should be some open tonight as of Crimson's request to the devs. And go ahead.
To be clear, there actually is room already.
Yes, there is some room.
GMD.
That's all right. I'm sorry. I didn't mean to say that there wasn't any room, but I am excited to have even more available to us. So. Yes, there is currently room. So if you want to jump in now, you can.
So like Ramsey said, this is all available right now. You can jump in and try it out. And in fact, I would love it if you guys tried it out, and you came back and said, "Hey, I love this," or "Didn't like this," or whatever. We're here, and if everybody has questions when this is done, we're the type of team that's always happy to jump onto a stage into our Discord, answer your questions, walk it through with you, jump onto a call. We're happy to drop our calendar link so you guys can schedule some time with us. We're of the big believers that like crypto is a little bit more of a white glove B2B, like kind of service oriented kind of marketing, right? So that's how we're here to help you guys. So give it a try and let us know what you think.
Yeah, well, I'll be doing another video on this for sure when I have a chance as well, just to give everybody a run through. Just to instead of this AMA, obviously I'll post this AMA to the Discord after we're done here to let everybody watch this. But I will do a walkthrough video myself to get some GMDers, especially the opportunity to see this nice and full screen, as it's a little harder to see on this Discord AMA.
And so, all things ETH, let me ask you, before I let you go, now that you've learned a little bit more about Savvy, how would you pitch Savvy to a friend or to Crypto KR, who you talk to all the time?
I think Savvy's a great place to yield farm. You're gaining some underlying yield on a multitude of strategies. Doesn't have to be the underlying GLP of GMD's strategy, and I like that you're working with some reputable names. You guys are doxed. That's huge, especially for a guy like Crypto KR, who's been burned in the past. And just want to I like that it's self-paying. I think that's a niche in particular that does well in this space, especially for those who are more conservative. I do some videos actually, if you're familiar with Cryptos R Us. He's one of the biggest DeFi or biggest YouTubers in the space. He lets me do a DeFi space once a month, or actually once a week rather, and his audience is very, very Bitcoin focused, and being able to deposit wrapped BTC and into this protocol, maybe as a AM or a AMM, or the market maker rather, not an AMM but a market maker, might be interesting to his audience, and so I look forward to sharing it with them as well.
Awesome, yeah. Well, I appreciate you saying that. And again, we're around. I dropped our link tree. We're around in this, and we're around in the GMD Discord. So if you ever want us, you guys have our handles. Just tag us, and we're happy to answer any questions. But yeah, thank you so much to All Things ETH. And like I said, we were watching your videos before. We just so happened we're like, oh, this is beautiful. We get to do an AMA with you. So thanks for having us.
Yeah, absolutely. Thanks for your time, guys. Thanks to everybody who's shown up today. I really appreciate all the investors on the GMD side, and obviously on the Savvy side. I look forward to meeting some of you in the Savvy Discord. And if you've migrated over to the GMD Discord, feel free to drop me a line, tag me in any comments in the general chat. I'm here pretty often. I do have other things going on in my life, but GMD and GND is one of the bigger ones right now. So happy to answer any questions you might have about GMD in particular, and thank you so much for watching, guys. Any last thoughts before we go? Anything we missed?
Yeah, just the last thing we'll plug is come get that GMD BTC before it's all taken up. I know I'm gonna go put some in right now before it's all taken up, and 100%. Then we have some market making campaign going on right now. Earlier today, I was teaching my dad how to do it. So if the normies are coming for it,
yeah.
And then secondly,
I super like that Zap feature. That Zap feature is huge for. I know most of the market makers that I've talked to are more less DeFi savvy, more just investor savvy, and so once. Maybe not as degen of the yields, right? So happy to make a little bit less, but want to be safe and also want to be easy, right? Because maybe they have less time.
That's all Ramsey right there. Shout out to Ramsey. He built that out himself. So the market making campaign is going on, and then the LVP starts on August 8th. So plenty of ways to get involved with Savvy, and obviously just tag us. We're around.
Excellent. Thank you so much, guys. And we'll see you around in the Discords.
Cheers. Thanks.
All right.
Thanks, all.
Have a great day. All right, guys, thank you so much for watching this AMA with Savvy DeFi. Be sure to like, subscribe, hit the notification bell for more content just like this. Follow me over at Twitter at All Things ETH. And if you have any questions about GMD and Savvy DeFi, feel free to reach out to us in our Discords. With that, thank you so much for watching, and God bless.